I'm so excited today. I am still kind of recovering. I don't know what happened with my voice. Last night I went to play, or yesterday after the trading room, I went to play hockey, and I think I inhaled so much cold air that gave me a bit of a cough, and I sound like this. But I was already kind of not feeling the best. But I'm gonna go again today, see what happens. I learned nothing, apparently. But yeah, hopefully everything is good with you guys, and my voice might crack a little bit like a teenager. I might have to do a couple rumblings. But I thank you guys for understanding and welcome, and thank you for being here. Um, Let me just confirm everything looks like it's going. Everything is good to go. Let's start then. Let me just take a look. I'm going to take a look at the comments in a second. My back's kind of turned towards them. It's not the most ideal setup, but you don't want to see what I'm looking at. Just all my hockey equipment hung up, and yeah. Wearing my vintage TradePro shirt. This thing was made in Toronto, Canada, in our first head office, and it's nice stitching. It's not like a silk screen printout with 12 for 2012, the year we were founded. All right, let's get started. Enough of this. Futures flat. S&P, NASDAQ, and Dow unchanged. Russell's down 0.1% today. Treasury yield steady at 3.69%. Dollar index near 99 and holding recent gains. Gold takes a beating, down 1.4% to 4,065. It had to pull back at some point. Retail is heavy buying gold, so I think this could be a pullback moment for a long opportunity into the near future if gold continues its historic run. All right, WTI oil up 1.6% on trade optimism with India, and Bitcoin slightly firmer but hovering around $108,000. All right, so in terms of the impact of the market, seasonality favors the upside in the next couple months. So from October to December, look, October is kind of a bit of a skirtish month. It's like there's gains, but you're always kind of like, yeah, it's October. I think it's because it's Halloween. It's always a spooky type of month in the markets, and you're always concerned and worried. All right. November, December, things pick up. January, February, March, typically very bullish from a seasonal perspective. And in the next, to end the year out, S&P historically has another 4% from here, and NASDAQ about 8% on average. So, it's interesting to note that as we head into the end of the year, we're going to squeeze out a little more gains and lock it in for the year, but it does tend to be bullish from here. All right. In the U.S., the drivers for the stock market, Donald Trump says he has confirmed the 155% tariff on China, and he hinted that the Xi meeting may not happen. The two leaders may not meet. Then we had a USTR trade representative on the wire this morning saying that it could happen. All right, and Donald and President Xi, or President Trump and President Xi, have a great relationship to one another, and trying to jawbone the meeting as if though it's going to happen. Look, we don't really know what's going to happen. That's the reality and the truth. And I bet you Donald Trump doesn't know if he's going to meet President Xi, and neither does he. All right, that kind of rhymed. That was very Dr. Seussian. So I can't tell you. If they don't know, I can't tell you then you certainly what's going to happen. But I do know this, all right? Something will happen. 155% China tariffs for November 1st are confirmed. Whether the meeting happens or not is going to impact the market. If it doesn't happen, obviously these tariffs are going to be destructive to China, and it's going to not really be good for the relationship. So we kick the bucket down the road of resolution, and there's going to be some more tension, some trade tension. Xi may respond with some kind of tariffs on his own, and it's an escalation at that point. If the meeting does happen, but nothing happens in the meeting, it's almost worse, right? It's almost more escalatory. So this, as much as you want closure for your mind and your psychology, the human beings, this is what we do. We want closure. Closure feels nice and neat, and we can go to sleep with it. The reality is you're going to have to deal with this over the next couple of weeks until November 1st. And even, I would dare say throughout Donald Trump's term, President Trump's term. All right. It's something that we knew at the very beginning we're going to have to deal with. So adjust to it, right? I'll give you updates as they come. There may be some tape bombs today. Be careful. Listen to the news feed, because I get this sense the fact that we're just stuck at this frothy level in the market, that we're gonna get some tape bombs or major updates regarding the trade front today. It's just a little hunch. It may not happen. Okay. But I get the sense it will. U.S. and India near a trade deal. All right. Could cut tariffs on Indian exports from 50% to 15 to 16%. Again, all these big tariffs are mostly temporary, designed to push the countries into negotiation for lower tariffs. All right. Government is still shut down. It's the second longest shutdown now in history at 22 days. Today is officially day 22. Okay, it's the second longest. I think the longest one was 35 days and happened in 2018, and I was trading it at the time. It's just 2018 seems so long ago to me in my head. All right, earnings yesterday. Oh my gosh, Netflix did terrible, down 7%. Netflix got beat up. It was a big profit miss. They had a tax hit to materialize on, and down 7%. It dragged the whole market down after hours. Texas Instruments down 8% as well on a weak forecast from yesterday. Apple update. They're cutting their iPhone Air output, but increasing 17 and 17 Pro production. I never thought the iPhone Air was a good idea, but who am I to give Apple direction? I remember watching this interview of a shareholder event, and the guy stands up. This is for Tesla, and he said, "Mr. Elon, you should hire me as your vice president." It's like I've been trying to talk to you for 2 years. And Elon says, "Well, we don't have any openings." And he goes, "Well, I'll consider a future CEO role too." He's like, "I'm a visionary like yourself." It just reminds me of that. Like that's me in the lobby of the Apple shareholder event. All right, iPhone Air, I never liked it. no one cares. Anyways, but yeah. So today after the bell, we have Tesla, we have IBM, we have Alcoa, ticker symbol AA on that one. That's gonna be a pretty important one in market moving. All right. This morning we also had AT&T come out. They came out with earnings per share of 54 cents versus an expected 53, and revenue of 30.7 billion versus 30.82. So they reiterate their guidance for growth. So AT&T shares are higher by 2.5%. All right, they liked it. The street liked it. The traders liked it, and retail likes it. Up she goes. So AT&T is bidding in pre-market at the moment. All right. That's the news flow. Like there's not much news today other than some of the stuff around the trade talks, which I think is the main thing we're watching for anyways. As a reminder, Friday we have CPI. We did get CPI data out of UK overnight. That data was slightly softer, which is, good. Less inflation is better for us as consumers. Know who it's not good for? People who hold debt. They love inflation because they inflate the value of the money away and they owe less in the future. They owe less, worth less dollars. But for people who actually are savers and have assets, inflation sucks, right? So CPI was down in the UK. We're looking for that report here on the US. It's coming Friday at 8:30, non-traditional time. And again, this is because it's tied to pensions, and they have to release it to index the pension to inflation because it's taken off the September number. So those numbers are coming out Friday, and it's a perfect time for the Fed meeting coming up. All right, so keep that in mind. Friday is going to have a lot of volatility around that event. All right, so next we talk about my levels, George's daily levels, because they're George's daily levels, and I'm George. Maybe I'll just call them my levels. And I've chosen to include one more because 5 was like an odd number. Human beings like even things. I'm going to go to 6. I have 6 levels. Prior day high, which was 67.89 3/4 on the S&P 500 futures. Overnight high was 88 3/4. So a point below the overnight high. You're already getting context of what's happening here. Prior day cash close 72 3/4. All right. Overnight low was 64. Prior day low was 59. And prior day open was 73. So we are opening and closing at the same price, making a swing high on the U.S. session and swing low. That's very range bound. It's not a big impulsive drive. It's not a big move. And the overnight ranges are within the range of the U.S. session. What does that tell you? Well, this is what it tells you. We had a nice bullish move on Monday. All right. Yesterday, Tuesday, we just chopped the top and consolidated. That's what it tells you. All right, today our overnight range is in between the prior day's U.S. trading range. And those levels give me context for this reason. I love them because they paint the picture and you don't have to think about it beyond that. All right, so look, it's a consolidation day today, and we're at 130,000 contracts before I turn my head to do this update on the ES. That's low. All right, it's a consolidation type look. Market's waiting, I think, for the CPI number on Friday, and today I'm only looking to trade high quality order flow setups at the extremes of these 6 levels I just gave you. I don't want something in the middle. I don't want something that looks okay. I want something that when I review later at 4 p.m., I said, great, I took the trade that I needed to wait for. All right. Or if I have to wait for it too long and I get bored of being in front of the market without being in a trade, which happens to me, I got other stuff to do. I got 2 kids. I got a beautiful wife. It's always warm outside. I love playing hockey. You know, I don't want to stay here just glued to the screen all day. That's fine. That's fine. If I don't get the trade and it happens right after I leave, kumbaya to the team. I hope they get it. Right? I don't need to trade. I need to take high quality setups. That's the difference in psychology. So I wrote, I'm only taking high quality trades, high quality order flow setups at edges or levels where it's going to have some extreme sentiment, not at a level where it's consolidated the last 2 days. Because it doesn't matter what happens inside of the range because it's a range and it's useless. It's useless information. What matters is at the edge. Do we get up to the top and get a whole bunch of buyers stuck? Well, now we got sell stops to run to the downside. Do we go test the low and get a whole bunch of buyers stuck and then flush that level, hit their sell stops, run it down? Order flow tells me all that in real time. It's not hypothetical questions. All right. So this is what I'm looking for. If we get bid through that 67.90, which is an overnight high, I'm going to look to get long. All right. And if we fail to break and get longs trapped, I'll short and run the stops lower. So the 90 for me is the thing at play. If we retest the 67, mid 60s to the downside, the S&P 500, like there's another series of 2 trades, but that's far away. And I think we're going to touch the top end first. So basically, if you look at a range, there's only 4 trades in a range. Is the failure of that high, so you short down, or the break of that high with the pullback and some good order flow for a spring, for an impulse move higher. And on the downside, buy the range or sell the break, right? Those are the 4 trades. I think I'm going to get the top trades first because we're almost there and we're on some bullish momentum. All right. That's the trading plan for today. It's a consolidation day. There isn't a clear cut, do this, and it's going to be an easy day. I wish. Wish there was that kind of data for me. And the last thing I want to tell you is there's a giant call wall on the options front sitting at 67.7 to 67.80. And for now, that's kind of going to be a magnet on the ceiling. It's going to push price into it unless we get a clear break out of it, in which case, by the time you get to 90, you should have good flow for the break of the overnight high and the continuation and the drive higher. And that should be an easy trade. Easy seeing and qualifying trade. It doesn't mean that trading is easy. All right. The put wall's all the way down 67.20 to 30. That's all the way down there. I won't be around today by the time we get there, hopefully. Otherwise, it'll be a big dump. That's the trading plan. I'm going to turn off the camera so you don't have to look at the back of my head. But I'm going to turn around and answer some questions real quick, and then I got to get into the trading day with Victorio, Fatty, the team, and everybody on Zoom. If you guys like this or like what we do or want to check out our trading room, head on over to TradeProAcademy.com and check out our what we do. You know, we do this every single day, and after this update, I go into the trading room. We have 4 different traders. We share insight, analysis. I'm the order flow guy. I share the level, real-time updates. It's a freaking party. You're invited. Tesla earnings today. MS, what's up, brother, man? Demba. What's up, sir? David, big fan of yours since almost 5 years. I have a question. How do you know where the daily put and call walls are? David, are you still here, bro? Just let me know in the chat box if you are. I'll help you out. Michael, morning, sir. Yeah, I'm waiting for that too. I think the moment the government opens back up, we'll get a flurry of data. I almost think it'll be a little more challenging to trade that than what we've gotten used to in the last couple of days. But I do want the government to open up, especially for the people not getting paid. It's still working, like TSA workers, keeping U.S. safe, the United States and borders and the country. I think it's necessary. David, I don't know if I lost you or not, sir, but ask me again tomorrow and I'll answer it for you before we get started. All right? Or I'll figure out a way where I could see the questions as I'm going. Oh, you're still here. All right. So basically, David, the way you get call and put wall activity is you're looking at open interest, and maybe I could show it to you tomorrow. I could do a little piece on it, or maybe I could just log into Trader Workstation right now and screen share. No, I'm not really set up to do screen share. I'm going to do it tomorrow, David. But the way you do it is you basically find a tool that shows you open interest. You don't want volume, you want open interest. There's a difference in options between OI and volume, and you can find that difference by Googling. I'll keep it brief. The open interest is what you're looking at, and you're looking at levels in the next 3 expiries that are closest to now. So ES futures have expiries almost every freaking day. They have weekly, they have monthly, bi-weekly, daily. It's crazy options activity. So you look at the 3 closest expiries because they're the most relevant, and you find out where the most options are open. Where there's the most open interest that lies, and that's a call and a put wall. And the reason it acts as resistance, for example, is not because there's a lot of retail long call options, but because there's a lot of dealers that are short call options that they then have to short futures to make money to offset and hedge their risk of upside potential on the underlying ES product. So that's called gamma. So they have to sell to gamma hedge their position or be in big trouble. And these big open interest levels are key areas to watch for. I hope that helps you. But which tool do you use to open interest? I'll show you. It's on Interactive Brokers. Let's do it tomorrow. You want to do that? Instead of me writing it on the chart, I'm going to flip it, turn around, turn my camera on the other way, and then we're going to just go and find it together for the day. You want to do that? I'm committing to it. All right, cool. We'll use the tool tomorrow together live. Get our hands dirty. Love you guys. Have a great rest of your day, and I'm going to see you in tomorrow's session where my voice will probably be worse because I'm going to go play hockey today and beat it up even more.